The best quarter since 2020 lasted exactly one day into Q3. Tech sold off today, the ADP jobs report came in soft, and the new Fed Chair stepped onto the global stage in Portugal, and investors weren't sure what to make of what he said. Hello, welcome back to the Diligence Desk. This is your daily wrap for Wednesday, July the 1st, 2026, first day of Q3, and it was a reminder that markets don't stay in celebration mode for long. Let me walk you through what happened, what it means, and what to watch before tomorrow's big jobs number. Let's go. Quick reminder, everything here is for education and entertainment, not financial advice. This is my own real money experiment. I'm not a licensed advisor, so don't buy or sell anything just because I did. Do your own research or talk to a licensed professional before making any investment decisions. Let's look at the numbers. All four major indexes closed in the red today, though barely in the case of the Dow. The Dow lost just 14 points, down 0.03%, closing at 52,305. It held up best partly because oil prices falling more than 4% benefited some of its non-tech names. The S&P 500 slipped 0.22%, closing at 7,482. The Nasdaq was the weakest, down 0.66%, closing at 26,041. Tech gave back some of its two-day rally. The Russell 2000 small caps fell 0.39%, closing at 3,013. Three things drove the softness today. First, a natural pullback after a very strong end to Q2. Second, a soft ADP jobs number, which we'll cover in Story 2. And third, Fed Chair Kevin Warsh was speaking at the ECB's annual forum in Sintra, Portugal. His message, inflation is still too high, and don't expect him to telegraph what comes next. That kind of ambiguity tends to make markets nervous, and today it did. Story 1 is about the Fed and about what kind of Q3 we're walking into. Today was the first day of the third quarter, and markets didn't exactly celebrate. The tech-led pullback was partly a natural hangover after two big days, but it was also a reaction to Fed Chair Kevin Warsh speaking at the European Central Bank's annual forum in Sintra, Portugal. This was only Warsh's second major public appearance since taking over from Jerome Powell, and what he said, or rather what he didn't say, is worth understanding. Warsh confirmed that inflation remains too high and that the Fed's mission is to get it back to 2%. He also said the public will see no changes in Fed independence following the Supreme Court case earlier this week. But on the question of what the Fed will actually do with rates, he gave nothing away. No forward guidance. That's a deliberate choice. Markets are now pricing roughly a 1 in 3 chance of a rate hike at the Fed's September meeting. That's a significant shift from 6 months ago when cuts were the main topic of conversation. The inflation story has flipped. Now there's a silver lining in today's oil price drop. Oil fell more than 4% on signs of progress in US-Iran talks. If oil continues to pull back toward pre-war levels, that takes some pressure off inflation and in turn off the Fed. We'll see. The real answer comes tomorrow. With the June jobs report, a strong number tightens the screws. A weak one gives Warsh room to hold. Story 2 is about jobs, and specifically about a number that came in below expectations this morning. ADP's private payrolls report showed that U.S. companies added 98,000 jobs in June. That's below the consensus forecast of around 118,000 and down from 122,000 in May. Now, before we read too much into this, ADP and the official government jobs report have been diverging quite a bit this year. ADP has generally undershot. So this doesn't necessarily tell us tomorrow's NFP will also miss. But the composition of the ADP number is worth noting. Almost half of those 98,000 jobs, 48,000, came from just one area, education and health services. Strip that out, and hiring was very thin across the rest of the economy. Leisure and hospitality has now had 6 straight months of weak hiring. What does this mean for the Fed? The tricky part is that even a soft jobs market doesn't automatically mean rate cuts. Warsh has signaled that inflation is the primary concern right now, not employment. So a weak jobs number buys time, but it doesn't flip the script on rate policy overnight. All eyes now turn to Thursday. The official June non-farm payrolls report drops in the morning, moved up from Friday because of the Independence Day holiday. Wall Street is expecting around 115,000 jobs. That number will set the tone for the rest of July. Story 3 is a grocery story, and it says a lot about where traditional retail is headed. Kroger announced today that it's acquiring Giant Eagle, a family-owned regional grocery chain, for $1.65 billion. That's a $1.25 billion in cash, plus taking on about $400 million of Giant Eagle's liabilities. Giant Eagle operates 197 supermarkets and 11 pharmacies across western Pennsylvania, northern Ohio, West Virginia, Maryland, and Indiana. They generate about $9 billion in annual sales, and importantly, they keep their name and their Pittsburgh headquarters under the deal. Now, why does this matter? You have to know the backstory. In 2024, Kroger tried to merge with Albertsons in a $25 billion deal, one of the biggest grocery mergers ever attempted. Regulators blocked it. Courts blocked it. It fell apart and it was embarrassing. This deal is a very different animal. At $1.65 billion, it's small enough that antitrust scrutiny should be much more manageable, and it gives Kroger a regional foothold in markets, particularly western Pennsylvania, where it has almost no current presence. The underlying pressure is real. Walmart and Amazon are eating traditional grocers alive on price and convenience. Scale is how you survive that. Kroger stock fell about 2% today. Markets often react negatively to acquirers in the short term. The question is whether the strategic logic plays out over time. Quick look at what's coming before the long weekend. Tomorrow, Thursday, July 3rd, is the big one, the June non-farm payrolls report. Wall Street is expecting around 115,000 jobs. ADP came in at 98,000 today. If the official number also undershoots, that takes some pressure off the Fed. If it beats expectations, the rate hike conversation gets louder. We also get ISM services for June, a good read on the broader economy beyond manufacturing. US-Iran technical talks are continuing in Qatar. Oil was down more than 4% today on signs of progress, and the escalation reverses that fast. Friday, markets closed July 4th holiday. Tuesday, July 7th, SpaceX joins the Nasdaq 100. If you hold QQQ, expect some volatility around the rebalance. And from mid-July, Q2 earnings season kicks off in earnest, starting with the big banks. That's the next big catalyst for the market. All right, that's the daily wrap for Wednesday, July the 1st, first day of Q3. It was a quiet reminder that the market takes a breather after a strong run. Quick portfolio update. We now have 2 positions open. NVIDIA pick number 1 bought at $200.04, and Zeta Global pick number 2 bought at $19.61. Top analysts have a $32.50 price target on Zeta, which is about 65% upside from where I got in. Smart Score 10, strong buy. If you want the full breakdown on why I picked it, I've got a dedicated video on that, link in the description. We're 2 positions in, $200 deployed, $800 still to go. Pick number 3 is coming soon. If this was useful, hit like, subscribe, and I'll see you tomorrow for the jobs report. That's the one that matters this week. Have a good day. See you next time.